house prices are falling. Yes, that's right. In real terms, house prices are actually falling. In this video, I'm going to be going over the biggest scam ever and why house prices in real terms are actually falling and why it's the worst performing asset. And I'm also going to go over what their best performing assets are and how to protect yourself in 2021, because there's going to be big things happening in 2021 and you're going to want to protect your purchasing power because there is a great debasement happening right now. Okay, now before you say, this is clickbait, house prices are going to the moon. Let's now jump into the data that shows why in real terms house prices are falling, and it's showing the biggest scam in history, the great debasement, and how your purchasing power is being devalued massively. In this video, I'm going to be specifically speaking about the Australian housing market and the US housing market, but you can apply this to any housing market you are around the world because all central banks are acting in unison and house prices are going up globally in unison. Okay, so let's get one thing straight. Over the past 12 months, according to CoreLogic's data, which is very optimistic data, in Australia, house prices rose nationally by just 4% over the past 12 months. Now, what you have to remember in Australia, the housing market isn't just one market, same in the US. Every capital city has its own market, every suburb has its own market. Some may be rising more than the national average and some may be falling more than the national average. But just going off the national average here of 4% in Australia, and according to CoreLogic data, house prices in the US rose 10% in 2020. But they have gone up a few percentage since then, so we can say around 13% since February last year. Now you may be thinking, that's awesome. 4% for Australia, 10 to 12% for the US, house prices booming, we're all gonna be rich. While in dollar terms, they are rising, but in terms of your purchasing power, they are actually falling. Now, something we have to clarify is inflation. And they keep saying, look, inflation's just between 1.5% and 2%. But I know that's not true, and you know that's not true. We all know inflation is at least 5 to 10% when you factor in housing, groceries, insurance, petrol, transportation costs. They're all going up much faster than inflation. And a way they actually used to measure inflation was by the increase in money supply. Now you have to have a look at this. This is absolutely crazy. Let's have a look at the M1 money supply in Australia and the US to see how much it has actually skyrocketed over the past year and how much your money in the bank is being debased and devalued. Okay, so if you look at this chart, we can see here the M1 money supply in the US has gone absolutely parabolic from 4.2 trillion to 18.4 trillion in 2021. As you can see here, it's pretty much a vertical line, and obviously in February, this is from all the stimulus checks that are going out, and you bet there's going to be high inflation coming. They're all saying, look, it's just going to be temporary inflation. We're not going to do anything about it. We're going to let the economy run hot because we can't afford to lift interest rates. Now let's have a look at the Australian M1 money supply. As you can see here in this chart, it's pretty much doubled from around 700 billion to 1.4 trillion. Now, for all of you who don't know what the M1 money supply is, it's pretty much just a supply of all money in existence by hard money in cash and coins and deposits in accounts and all money that can be easily liquidated. So as we can see here in Australia, the money supply has doubled. In the States, it's pretty much tripled. So while it may seem like, ooh, house prices are going up 4 to 10%, it's booming, it's actually because your purchasing power and the money in existence is being debased by up to 50%. So for example, if a house was $1 million last year and you sold it, you'd have $1 million in your current purchasing power. But now, say for example, that house is now $1.1 million. You may think that's great, and you sell it and you got $1.1 million. But that 1.1 million when you sold your house compared to last year, before all this money printing, that has been debased by almost 50%. Now I know purchasing power, debasement, inflation, it's all kind of confusing, but when you just put it in simple terms by money in circulation, you can see how house prices in real terms are actually falling. And it's not just the M1 money supply is going crazy. I'll show you a few more charts. Have a look at this, the Reserve Bank of Australia's balance sheet. It's gone from under 100 billion in 2012 to over 400 billion, increasing by more than 400%. And this is why they're saying money printer go burr. And while interest rates have dropped because they've been buying so much government bonds and mortgage securities, but again, this is devaluing your money and it is crazy. You can go to work and work hard for a whole year and think, yes, I finally got a pay raise, I'm making $100,000. and then all of a sudden they just print the currency by 50% and that $100,000 wage is no longer a good wage anymore. And if you look at the Federal Reserve balance sheet, it's gone from around $3.5 trillion to $8 trillion. But don't worry guys, there's not going to be any inflation. We just printed all this money and it's going nowhere. Also, what is alarming is Australia's government debt has increased from around 150 billion to 600 billion. But that's nothing compared to the States. In the States, the debt has gone from 14 trillion to 28 trillion since 2012. And that means when you're investing in real estate, the returns aren't keeping up with the rate of money creation and the rate of the debasement of the dollar. Okay, so now you're probably wondering, well, if real estate has been one of the worst performing assets and it's not doing its job of protecting my wealth and protecting my purchasing power, what will? Okay. So instead of just focusing on all doom and gloom and what all the problems are, because it's really easy to say what all the problems are, what all the issues are, but it definitely is a lot harder to provide solutions. But that's something what I want to do, because I want to provide real value for you guys and I want to provide life-changing content for you. Okay, so let's get into the assets that actually performed the best over the past 12 months. Now, traditionally, you may think gold is the ultimate inflation hedge and it's the ultimate store of wealth to protect your wealth. But unfortunately, over the past 12 months, gold hasn't done its traditional job. Over the past 12 months, gold has only increased by 5%. Now that doesn't mean I don't like gold and I don't invest in gold. I think this has actually created a great buying opportunity for gold, because when you're investing, you don't want to be investing in the latest greatest stock or the latest housing market boom. You want to be investing in assets where no one else is investing in it, where no one else is talking about it, and when it's undervalued. So again, this is not financial advice. This is just what I'm doing to protect and preserve my wealth and potentially build my wealth over the next 5 to 10 years. So at these prices, I'm actually looking at buying gold because the stock market is at all-time highs and the housing market is at all-time highs. But let's actually get into the other assets which have actually done a good job of preserving wealth over the past 12 months. Okay, so the next best asset which has outpaced the debasement of the currency is the S&P 500. Since 12 months ago, the S&P 500 is up around 55%. So it actually has done its job of outpacing inflation and outpacing the debasement of the currency. Now, I know you may be thinking, look, stocks are overvalued right now and a huge stock market crash is coming. Even I think there's going to be a stock market crash coming. But as an investor, I actually welcome a stock market crash because it creates great buying opportunities, and I'm investing for the long term, not the short term. And in Australia, the ASX 200, which is the top 200 companies in Australia, that's up around 35%. So it's definitely outperforming the property market and it's just keeping up with the debasement of the currency. But something that's a bit controversial, but has actually been the best performing asset, and this is not just going over my opinion on if you should invest in it or not, you have to make your own decision, but just going off the facts, the data, and what has actually been the winner by far, over the past 12 months, the best performing asset has been, guess what? Bitcoin. It's up almost 1,000%, almost 10 times. And a lot of people are now seeing Bitcoin as a better store of wealth than gold and a better hedge against inflation as gold, because there's only currently 18 million Bitcoins going around and a few million of those coins have been lost. Also, every 4 years it gets more and more difficult to mine the coins, and there will only ever be 21 million coins ever created. Now, I'm not telling you should invest in Bitcoin. I'm not telling you to put all your net worth in Bitcoin. It's a very risky asset, but I am allocating a portion of my portfolio of 10 to 20% into Bitcoin, because it has been doing a better job as a store of wealth than gold at the moment, and it has also been a better hedge against inflation. But it is very risky, and I wouldn't go ahead and put all your net worth or all your portfolio in Bitcoin just because it's been the best performer over the past year, and over the past decade it's actually been the best performing asset. So guys, even though you're seeing house prices going up and what it appears to be a housing market boom, in real terms, real estate is actually underperforming, and the only assets that have outperformed that is the stock market and the cryptocurrency market, and maybe Pokemon cards and collectible vehicles. I don't know if you guys are into collectibles, but Pokemon cards, basketball cards, they've all been going crazy. And this is just due to people wanting to protect their purchasing power. So guys, comment below, what do you think is the best asset to invest in, and what do you think is going to be the best asset that has the strongest returns in 2021? And for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date on the latest housing market and finance news. And of course, I'll see you all in the next video.